Hey everyone, and welcome to a mildly hilarious video on how tax brackets work. I know, the word funny and tax don't normally go together, but trust me, you're in for a real treat. So let's get down to business. Tax brackets are essentially like the different levels of a video game, but instead of collecting coins and stomping on mushrooms, it's mushrooms, right, in Mario, isn't it? Yeah. You're trying to avoid giving away coins to the tax man. First off, it's important to understand that the US has a progressive tax system, which means that people at higher incomes or higher levels of the game, shall we say, pay a higher percentage of their income in taxes.
Relax, pay your income tax.
And this is done through the tax brackets that we are talking about. Essentially, they are ranges of income that are taxed at different rates. For 2022, for single filers, income above the standard deduction of $12,950, which is called taxable income, the first $10,275 of that was taxed at 10%. Then from $10,276 up to $41,775 of their taxable income were taxed at a rate of 12%, and then above that it goes up to 22%. But it's important to note that these tax rates only apply to income that falls within that bracket. So if you have an annual income of $62,950, which gives you a taxable income, okay, after the standard deduction is deducted, a taxable income of $50,000, you will not pay 22% on your entire income. Instead, you would pay nothing on the first $12,950, then 10% on the next $10,275, then on taxable income between $10,276 and $41,775, you would pay 12%, then 22% on the remaining income above $41,775. So if someone says to you something like, oh, it makes no sense for me to earn more money, it would push me into a higher tax bracket and then I'd pay more tax and it wouldn't be worth it. That is a complete misunderstanding of how tax brackets work. If you get pushed into a higher tax bracket, it doesn't mean you pay that new tax rate on your entire income. You would only pay the higher tax rate on income above that threshold. So you would still be better off earning more money, even though you're being taxed at a bit of a higher rate on a small portion of your income. And this is the difference between your marginal rate and your effective rate of tax. For our guy in the example earning $62,950 a year, the highest marginal rate he was subject to was 22%, but he only paid that on $8,225 of his income. So if you add together all of the tax he paid at different levels, he paid 0% on his first $12,950, then you have 10%, 12%, and 22% on different amounts as he moved up through the tax brackets, and he paid a total of $6,616.88 in federal income tax, which is an effective tax rate of just 11.03%. So how do you know which tax bracket you fall into so that you can know your highest marginal rate and then all the rates you will be subject to at different levels of your income and work out your effective tax rate? Well, first of all, you need to determine your filing status. Are you a single filer, married filing jointly, head of the household, or married filing separately? Because the standard deductions and the tax brackets, the levels at which different tax rates kick in, are different for different filing statuses. Once you know your filing status, you can then look at a table on the IRS's website or other websites that have that information, and you can look at all the different tax brackets you will be subject to. It's also important to note that tax brackets are just part of the equation. There are also many deductions and tax credits that people can take to reduce their tax liability. The most common one, which we already mentioned, is the standard deduction, which most people take by default, but there are actually many more that can be used to reduce your tax liability. There are also a few other small taxes added on as well. It's not just federal income tax, you also have state income tax if you live in a state that has an income tax. If you don't, then you're very lucky. Then there's also Social Security or FICA taxes, which adds a few more percentage points as well. So it's not quite as simple as we show you in this video, but this gives you the general idea. So I hope this has given you a better understanding of how tax brackets work and got you one step closer to beating the final boss of the US tax system. And if you are down in the dumps about having to pay a load of taxes and want some free money, right now you can get up to 12 free stocks for signing up and making a qualifying deposit with the brokerage app Webull. And obviously that money that you deposit, it remains yours. You can use it to buy stocks or do whatever you like with. Link for that is down below if you're interested. Thanks for watching, guys. Please subscribe if you're new. We'll see you next time. Bye-bye.